Hello, everybody. I'm John. This is Strategic Investing, and today I got to talk to Peter Evans, Xtract One Technologies CEO, about their recent earnings report and the recent capital raise they did. And so let's just jump right into it here. Hope you guys enjoy the interview. All right, Peter Evans, how are you today, sir?
I'm doing very well, John. Thanks for having me back on the show. It's always fun to see you as always.
Yeah, no problem. So we had a lot that's been going on with Extract One. So, obviously we had earnings a few weeks ago. Some not so great things in there. Some things around One Gateway that are some positives, some negatives. But then shortly after that, we got the announcement of the capital raise, and so. I kind of want to have, start off with the capital raise because I think that's, on the top of the investor's mind right now. And kind of work that maybe into some questions about the earnings and whatnot. A couple things that maybe we didn't get on the call. So just first of all, I think the main question about the capital raise, obviously. For anybody that listened to the earnings call, there were comments on there, and you kind of have made comments before that a capital raise, it doesn't seem that it will be necessary to, for the ongoing operations of the business, right?
Mhm.
That you guys think that you can fund, the future growth of the business with the current cash situation that you have. Now you have said that, if there's an opportunity where you need cash to take advantage of large orders or whatnot, something like that you will. And now we obviously have that capital raise announcement. And so naturally, I think some investors were kind of confused. Wait, do we need the money? Do we not? What are we doing? So I'll let you just kind of jump into that one, address what you want to, and, just jump in.
Yeah, sure. So first off, John, I'm going to address this, but you made a comment about there's been a couple of interesting things happening in Extract One these days. Um, there's a couple of dozen interesting things happening in Extract One these days, but the two that you're pointing to are the question about cash flow and the question about the recent raise that we did. Um, we need to look at those things as two independent items. And I think there's a little bit of blurring and mixing and mushing things together and saying, how do these relate to each other? So let's look at them as two independent items first, and kind of in a standalone manner. First, the objective in our earnings call was to provide visibility to our investors on our cash position. Okay. Specifically, our intent was to provide kind of transparency and visibility to those investors of the cash trend. If you notice in Q2, we actually were almost cash flow break even. In Q3, we consumed more cash than we did in Q2. So some would start to ponder that and wonder, is this a trend I need to be concerned about?
Hmm.
We wanted to give that transparency and help people understand that, look, we have sufficient cash to carry on our business activities, right? And alleviate any of those concerns that the investors may have had, right? And again, provide sort of that transparency. Therefore, the conversations around cash, cash flow, cash burn. And, if you saw the trend from Q2 to Q3, to help understand that. Was this a view that something tragic is going to happen? No. We have enough cash. And, as Karen said, we continue to execute and we mind our dollars very, very closely. We run a very thin operation with a very low number of staff in order to make sure that we're managing our cash and creating a scalable business model. And we actually did put some cash back in the bank in May, but there's some cycles to that cash trend depending on what's happened, right? As an example, in Q3, we did burn more cash because we were investing a lot of money to bring One Gateway to market, to get that marketing engine going, to drive things like the supply chain and parts and other activities, preparing ourselves for the volumes of deployments that start ramping up in July. Okay. So, it's to really talk about that and help people understand there isn't a trend to be worried about here. But yes, there was more investment in bringing One Gateway to market. Okay.
Hmm.
The second key thing here is, like, as you said, as we've always discussed in these calls, if we see an opportunity to accelerate the business that makes logical sense and pragmatic sense, we're going to do that and take in that capital. I once had a great mentor who said, when you've got an opportunity to take capital in, take it because you may not have the other opportunity in the future,
Hmm.
right? And that could be a very different situation for the company. So we've been approaching the investment community continuously particularly since January of this year and a little before that. All right. And this is something the investors have been asking us to do: raise our visibility, raise our awareness, put more time out into the marketplace to help people understand the Xtract One story and what we're about and the great market opportunity. I
Hmm.
think I actually counted in preparation for this call, John, and I've personally done over 200 briefings with institutional investors. There was one day when I did 19 of them back to back in LA one day. Um, getting the story of Xtract One and the positive momentum we're on and the impact of One Gateway into the institutional investor community's mindset. Okay.
Hmm.
The good news is that generated a lot of interest for us in those institutional investors, and we want to improve the mix with more institutional investors. They tend to hold the stock longer. They tend to be less day traders. They tend to create a lot more liquidity in the shares. And so there's that interest in getting more interest in people buying into the shares and hopefully driving that share price up. So there's been a lot of work and effort to do that. And many of them have come to us and said, we want to be in. We want to find a way to participate. Okay. And so this is something we spent a lot of time doing to raise the visibility with that investor community. The market interest in what we're doing as a company, the macro market trends for weapons detection, the One Gateway is very, very high. And many of these institutional investors see us at a fulcrum point for the company for further accelerated growth as One Gateway comes to market. And we were approached by several parties who were very interested in working with us. And one specifically approached us and said, I've got a bought deal that I want to put on the table. And for those who don't know what a bought deal is, that's a scenario where someone's coming and committing to you a certain amount of money, a certain amount of investment. They essentially, it's not sort of a take what you could get type of a fundraise that you typically
Hmm.
see. In this marketplace, in this macroeconomic situation we've had, and with the downward pressure that's constantly on microcap stocks, for someone to bring a bought deal to the table, that's showing a high degree in confidence of who we are as a company and where we're going, and the investment analysis and due diligence they've been doing on our company for the past 6 months and tracking us. And so, quite frankly, the timing was perfect. Bought deals typically execute within about a 24-hour period. They're put on the table, the deal is done after hours, and it's done the next day.
Hmm.
And then there's a period of due diligence after that goes through your financial statements for further investors who maybe haven't had the benefit of the prior 6 months.
Okay.
The timing was perfect. I mean, the accelerating demand for One Gateway is very strong right now. And to have the opportunity to increase our working capital so that we can serve that demand and help service that demand, we felt this would be a good move for the company in the long run. To service the demand for One Gateway. Simple example, you know, we have a school that will come in and put an order in for, as an example, not committing to this, 50 units. Well, I need certain millions of dollars of working capital to be able to build those systems up front before they monetize,
Hmm.
right? Which we didn't have in the bank.
Yeah.
And so we want to make sure that we can say yes to all those orders that are coming in. And then once that flywheel is moving, the deals start funding themselves for the next one, the next one, the next one. So, as previously stated, look, bringing new hardware and a hardware product to market has a lot of costs that occur long before the revenue recognition occurs. And we didn't want to limit our ability to maximize on what we're seeing as a very strong interest for One Gateway right now. Just since we've done that raise, we've signed two more deals for One Gateway with two small school districts, and so we're very pleased with this momentum. Right? As I said, bringing new hardware to the market is expensive. Setting up the manufacturing processes, the industrial design, the redesigns, the trials, the betas, everything you have to go through, getting the inventory in place, all the subcontract manufacturers, and having that working capital will help us take advantage of the demand that we're seeing right now. So bottom line, we saw the demand growing. We're looking to get ahead of the cash requirements, and someone came to the table who's been kind of watching us for a while and bringing other institutionals to the table and saying, we want to do a bought deal with you. And that will allow us to grow much faster. So we can now focus on rapidly responding to the increasing customer demand and the interest and preparing for greater top line growth next year. Okay.
Okay.
So it's two kind of key ideas there, to help folks understand what it is we're doing and why we're doing
Yeah. Yeah. So bottom line, you
it.
guys, from an operational standpoint, you think you're solid, or you would have still been solid without this, but the main reason for the raise is acceleration specifically within one gateway due to higher upfront costs.
Yes,
Okay. Okay.
that's
Um,
a great way of summarizing it, John.
okay. So you mentioned some things there about, the investment community and this raise. I want to dig a little bit deeper if we can on Ventum Capital, the guys you did the raise with. Can you just maybe elaborate on what the relationship is there? Is it purely a financial relationship? Is there any strategic aspect to it? Some people were wondering too, how much of this is Ventum, buying on their own. Obviously, they put some analyst notes out. They seem to be pretty bullish on you guys versus, clients of theirs that want to go with this. Can just maybe some elaboration, some extra color around the relationship there.
Yeah, and so first off, the relationship with Ventum is purely financial.
Okay.
They are an independent and well-respected investment bank. Okay. And so, and they believe us. They've followed us for a while, and I like them because they put a lot of focus on putting out analyst reports. And frankly, a lot of that uptick that you've seen in that reporting has come as part of their due diligence that they've been doing on us for the past 6 months or so. Now, there are participants beyond Ventum who participated in the raise, other companies that we've met over time who have said, I'd like to be in. I want to
Hmm.
be in a more meaningful way. And instead of working with all of them, they were all channeled through Ventum.
Okay.
And so they consolidated all of that high interest in Xtract One and kind of brought all those quality institutional investors to the table.
Gotcha. Okay, that makes sense. Speaking of some people, or organizations, I guess I should say that have participated in previous raises, partners that you have. It seems like MSG chose not to exercise their pro rata rights here. The can you maybe just speak to that if you can? I know, it's not up to you. It's their decision. But also just maybe I think would be a good time now to get a little bit of extra info, maybe some recent highlights you can share about your partnership with MSG, how that's working to accelerate the business, and also maybe OVG as well. I feel like maybe we haven't heard about them in a while, so any recent updates you can give on that one too.
Yeah, so MSG is, they continue to be a great, strong advocate. I was just talking to their CSO 5 days ago about an opportunity. We got an opportunity in New York, and they want to come and visit MSG, and they're great champions and great advocates. So there's no worries there. We're on speed dial, and we talk to each other all the time. But they didn't participate in this round. They've got many other interests, financial interests. You may have seen the recent announcement out the next sphere that's going on in Dubai, and they've got many other activities that are ongoing. The good news is, while they didn't participate in this round, they also did not exercise their piggyback rights. And if you look at the contracts and the terms, they had a piggyback right that would have allowed them to sell shares during any fundraising activity. And they chose not to do that. So they're still active participants and happy participants in what we're doing as a business. OVG continues to be a solid partner. I talk to their chief security officer and their team quite frequently. They brought various deals to us from non-OVG properties also, and we've signed a few more OVG properties, and they take time. Each arena is typically owned by a city, a municipality, a university, or something like that, and OVG manages that on their behalf. And as those universities or others get to the point where they're saying, okay, we need to do something different, OVG continues to endorse us into those venues. So we're pleased, right? Would I like all 350 venues today? Absolutely. But there's other decision makers in the process, such as those universities or those city organizations.
Yeah, that makes sense. Well, that's good to hear. It's good to hear. Another, I know you kind of touched on this already, talking about two schools that you've signed since the earnings call, or since the capital raise. I forget what you mentioned, but can you, maybe give us any other updates on One Gateway demand? Are we still on schedule for July? Anything like that?
Yeah, look, I could not be happier with the demand for One Gateway. It's exceeded some of my wildest dreams. I dream a little big. It's doing very, very well. I'm really encouraged with the market uptake, the interest, the contracts we're working through. We're executing about 2 to 4 demos per week in schools, in manufacturing locations, healthcare locations. We've got one out in California right today that's going well, one in Philadelphia that's going very, very well. So, the momentum and the excitement is there. I wish I had more systems so we could do more demos, to be quite honest. But, we're ramping. We continue to sign new customers, as I mentioned in the earnings call, and we continue to negotiate kind of larger and larger contracts where we're typically seeing, a purchase for a district, not just a school or two. We're not going to win every deal. So different customers have different priorities, different needs, different timing. Some people are very, very cost conscious, and we're not the solution for them. We're the solution for delivering a great guest experience with a high degree of security. We'll announce any of these deals as we're allowed to do so by the customers. Frankly, I'm very much looking forward to announcing some of the deals that we're working on right now.
Awesome. Well, actually, just reminded me, I forgot to mention one of the other things going on. You had the earnings, the capital raise, but you also just, I think, either yesterday or this morning, I think it was yesterday, announced the San Mateo. Do you want to give us any extra context on that?
Well, San Mateo is in an interesting situation because I met with them quite a while ago, 18 months, 2 years ago. It took them a little while because they, again, sort of as I alluded to with OVG, they're funded by the city of San Mateo.
Okay.
And so you've got a different kind of structure for decision making versus, say, a privately owned organization. Okay. And so oftentimes these public organizations, it takes a longer time to get through all the mechanics of getting a deal done. But very pleased that after 2 years of working with them, after many trials that they've done, not only of our technology but others, that they were actually proactively looking to protect their environment long before the recent California law that was passed
Yeah.
around requiring the healthcare organizations. So they were already looking to do the right thing, and they had a lot of an innovative mindset. We've deployed systems, and will continue to expand and deploy more systems into that location, and quite frankly, use them as a testimonial and reference customer for anyone else in California who wishes to see systems live. And so, that's a very, very positive deal for us.
Nice. Yeah. Yeah, definitely good to set up, a couple referenceable customers with that California law coming up. That'll be a good catalyst there. Just, kind of last main question here, and just for us, as investors looking ahead to the next couple of quarters, when we're looking at bookings, when we're looking at revenue, obviously we have, ramping one gateway, and that might continue at least in the next quarter or so to affect gross margin. What key areas, if you can give us any, do you think that investors should really be focusing on right now that will give us a good judge of how well you guys are executing?
Yeah, and so I guess the metrics around that, John, would be the same ones that keep me awake every single morning, noon, and night. The 4 or 5 metrics that I focus on, and I literally track these every day. Continued growth of backlog. The backlog is the most important number that's a predictor of the success of the future. Okay. And remember, a lot of our deals are subscription deals. And
Yeah.
so those are or deals that will deploy systems over time. And so think of, for example, you asked about San Mateo. San Mateo has, main healthcare organizations, hospital locations, as well as numerous clinics.
Hmm.
They're not doing that overnight. They will move from one to the next to the next
Yeah.
to the next over a period of time. And so the backlog is a predictor of continued conversion to revenue in the future. And so subscription deals may not add significant revenue right in quarter, but they will continue to generate revenue every month going forward or every year going forward, which will again carve out more and more of that cash flow and get us to cash flow break even. I
Hmm.
personally like subscription deals. It's the gift that keeps on giving, and it's recurring, predictable revenue that just keeps growing every month. The second key metric for me is securing more one gateway deals. I really do think we have caught a tiger by the tail, lightning in the bottle, whatever analogy you want to use, particularly with the schools. And the school deals tend to be much larger. They want to have 10, 20, 40 systems, which is very different than, say, going into a theater that might want 2 or 4 systems.
Hmm.
And so securing more of those one gateway deals, particularly with the schools, here in the USA, we barely scratched the surface of how many schools have deployed, and there's many, many more to go.
Hmm.
I think we can absolutely dominate this market with what we're doing with the one gateway. The third key metric for me, and something I'm tracking very closely personally, is steady growth of the revenue each quarter and how fast we can convert backlog to revenues. Okay, because that also addresses the working capital question.
Hmm.
You do focus on improved margins. Every product, when you first bring it to market, has got low margins, but as you build more volume, as you get more leverage on your supply chain, as you lower your operating costs and your bill of materials costs, you start to see those margins improve. And I expect the One Gateway to track the same margin trajectory that we saw with the Smart Gateway. And so we can see a very healthy margins for that product. And the last thing is something we've talked about already, tracking that path to cash flow break even. To me, the metric for cash flow break even starts to become a forecast of when we go to NASDAQ and we uplist onto a US listing. I want to get there first because it gives a lot of stability to the business, which is needed to do an uplist.
Yeah, yeah, it makes sense. Along with that recurring revenue from the subscription, and I know that's something that investors really like, that stability and predictability there.
Agreed.
Yeah.
Agreed. It's
Um,
interesting. We find the investor group breaks down into two schools of thought. There are those who are growth at any cost, no matter how much money you have to take in and do capital raises. And then there's those folks who are very focused on value creation versus growth. And the value investors want to see you get to cash flow break even and that predictability of revenues.
mhm.
Um, I think we're actually in a very unique position, although it's been a hard journey to kind of travel, where I think we're showing the high growth numbers while showing the path to cash flow break even, which is why folks like Ventum and others who are tracking us are very excited because we can serve both interests.
Nice, nice. Yeah, well, I mean, it sounds good. I'm excited, with one gateway coming up, and I'm, obviously, we're hoping that 8 million definitely accelerates and helps you take advantage of that lightning in a bottle there.
Yeah.
Um,
Well, the other thing too, John, just I don't want to not seem like I'm appreciative. We're still doing some really great deals with Smart Gateway. It is the
sure,
right
yeah.
product. If we look at some of the trials we're doing in healthcare organizations, it's very, very important for them to catch the little tiny knives because of the proximity of the caregivers to the patients.
Hmm.
There are some folks who saw the trial we ran out in the east coast of Canada. If you look at the news in January, they had a stabbing, and one of the nurses needed life-saving emergency services, right, in order to save her life from that stabbing. Uh, Smart Gateway does very, very well in those kinds of applications and in places like San Mateo. So I think we're serving markets, and unique market needs with product fits that goes very, very well for those market needs. So Smart Gateway is doing very well, but One Gateway is going to be very interesting as an accelerant for us.
All right. Well, and any last thoughts before we wrap it up here?
It's going to be a very, very next 6 weeks, 5 weeks as we march away towards the end of the quarter. And we like the activity. It's very good.
That's good. It's good to hear. Well, Peter, thank you as always for coming on. I know the investors and myself really appreciate it, and hope you have a great rest of your day.
You too. Thanks a lot, John. We'll talk to you real soon. And again, thank you to you and thank you to all the investors for continuing to support us.
Yeah, yeah, no problem.